This conference will now be recorded.
Well, thank you all for joining me for one more edition of the virtual business networking meeting. As we always do, we'll have three parts to the session. The first part will be introductions. Everybody can take a minute or two to introduce themselves, say who they are, the product or service they provide, maybe where they are geographically, because I know we've already started to have a little bit of interesting conversations around that. Um, the second part of the meeting is maybe some of the introductions will trigger questions or comments. Um, so we'll address those. And then the third part of the meeting is just general business conversation, which I'm sure we're not going to have any shortage of topics with everything that's going on. Well, here in the US in particular, with the inflation and the Fed interest rates and the midterm elections, but also globally, a lot of these things also affect the entire global economy, and that'll be that. I will try to do my best to keep us on track and get everybody out of here 45 to 55 minutes after the hour. So if you have another meeting coming up at the top of the hour, you have a chance to take a break and maybe get a glass of water or something. So that's it. Without further ado, and I'm going to go with the first with the people that have been to a bunch of these meetings before that are the experts at these introductions. Um, so Patrick, why don't you start us off, and then Rhoda, you can go, and then we'll go Paolo, and we'll finish with Lynn.
Hello, everybody. Apologies for being late. Very frustrating. Anyway, I'm working with a team of global entrepreneurs who are on a mission to create as many thousandaires as possible in the next 6 to 12 months. That's helping as many people as possible earn an additional $1,000 extra a month above and beyond what they're already earning. And the reason we're doing this is we're going headfirst into, we are told, a global recession, inflation at a 40-year high, the price of everything is increasing. So an extra thousand a month represents a 10 to 20% raise in the average family, increase for the average family, and that's going to help them keep their heads above water. So how are we doing this? We're bringing to the marketplace really exceptional products that millions of people both want and need, products that address fatigue, brain fog, and stress. In a consumer study, we found 81% of people felt a positive difference using these products. And if that sounds like something you'd like to know more about, my details are in the chat.
Perfect. Thank you very much. And see, that's another benefit of having veterans on these phone calls. They or these video chats. They remind me of the stuff I should be saying that I didn't. So please put your contact information in the video chat because I will send it later to everybody so you can have follow-up meetings or visit websites or do whatever. So Rhoda, please, if you could take a minute or two, same thing, to do your introduction.
Everyone. I'm in Indianapolis, Indiana. I'm Rhoda Israelov, and my team and I say it for you, do just that. We write the content that you read when you go on our clients' websites. So we focus on the wordsmithing piece of the marketing puzzle. So we are writing on behalf of our clients as ghostwriters material that helps their web visitors understand that they are in the now and in the know, and that they're ready to provide ongoing, relevant, up-to-date information that will be on the website forever and will continue to help drive traffic through keyword search. So right now I am looking for companies that are in the transportation business in some form. Either they are movers, they are truckers, they are other forms of transportation, because that is a hurting industry right now in terms of finding employees. So my team and I, we will say it for you.
All right, very good, excellent. Paolo, if you want to go next, please.
Sure. Thank you, Sal, and good afternoon to everyone on the call today. My name is Paolo Agostinelli. I am the owner of Equitas Funding Group. We are a real estate investment firm located just outside of Pittsburgh, Pennsylvania. We purchase, renovate, rent, sell residential and commercial real estate. For the benefit of the group, I'm a member of the Pittsburgh Real Estate Investors Association, Pittsburgh REIA, and I lead our commercial real estate subgroup. And I mention that because many of our members are small business owners, they're real estate owners, they're people who are looking to purchase real estate as part of their business, and every other aspect that of every other functional group that touches real estate. We have members that are a part of that. So if there's something that I can't help you with specifically, I am always more than happy to make the introduction to someone within our network to help facilitate transactions here in the Pittsburgh area or Pennsylvania in general. We get a lot of referrals, inquiries in Ohio, New York State, surrounding states. So whatever it is that you need, even if you don't know where to start, I'd be more than happy to point you in the right direction. And again, if it's something I can help you with, more than happy to make the introduction between you and any member of our group, if it makes sense. So thanks again for having me on the call. Looking forward to the discussion this afternoon.
Perfect. And please put the a link or whatever you need to for the in the chat for your meeting over there. Lynn, so you get the bat cleanup.
Well, I hope I hit better than the Phillies did in the World Series, because their cleanup hitters were 0 for. And anyway, so it is. So I am Lynn Shepard, and after my 1 year in Pittsburgh, that was 54 years ago, I left corporate America, U.S. Steel, which probably explains why I left corporate America to begin with, because it was U.S. Steel 54 years ago, and came back to Philadelphia. And for interesting, Paolo, in the next 19 years, I was involved in real estate investment. We actually had a very, very sizable company, and unfortunately lost the whole portfolio in 1989, over 70 properties. So is what it is. Anyway, but I've been involved in multiple businesses. I'm sort of an incurable, non-recovering entrepreneur. Currently, I'm involved in about 8 businesses, and also in the GoFundMe campaign, which I'll tell you, when we get a chance to have a discussion. But what I do principally with most of my time, and this Patrick's involved with me, is I'm involved with a managed investment fund. It's involved with various investments managed by very experienced traders. And we've been earning, since I got involved 1 year and 15 days ago, but who's counting? It's been earning about 3% per week. Not a bad deal. Anyway, so, and Patrick can attest to that.
Yeah, I can. And Lynn convinced me. He's very convincing, He's a convincing type of chap. But he said to me, look, you have money lying around there. What's it doing? And I said, not a lot, you see. So he said, look, you see, I didn't know anything about this. I still don't know anything about it. So I said to Lynn, look, I'll invest €1,000, right? And every week I kept reinvesting it. And now I have over €4,120. And I'm not quite in it a year yet. Now, that is very interesting. It is very, very interesting. Lynn has been very supportive, but all it takes me is I go online once a week at the weekend, and I do click, 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 and I say, wow. Like last week, I got €97, and I just reinvested it. So I can't believe it. I think either Lynn is creating some kind of magic or something. But look, it's a bit of fun, and it's there's more to know about it. But Lynn knows it all. I think he nearly knows it all. That's it.
Okay, excellent. Well, listen, that now that the introductions are over, I obviously also have a couple questions for Lynn and maybe a question or two for Rhoda. But does anybody have questions before I
Yeah.
go?
What do you do, Sal?
Oh, thank you. I see. I tell you, I get so wrapped up and so excited. Sometimes I forget to introduce myself. So my name is Sal Acosta. I am a business broker. I help people buy and sell businesses. Just to give you some numbers around that, I usually work with companies that are on the low side, maybe as few as 10 employees. On the high side, maybe all the way up to 200, 250. From a revenue perspective, anywhere from zero all the way up to 10 or $20 million for the year. And from an EBITDA perspective, anywhere from hopefully at least break even to about a million or two for the year. And now through the magic of the internet, I'm actually working with people all across the US, which is really interesting and really fun. And that's what I do. So, does anybody have any questions for anybody based on the introductions?
I do. Paolo, sorry. Is the I'm talking to some real estaters at the moment, and they're telling me things are not good. Is that your experience? I try to drill down to find out, and they said, well, business is slowing enormously. But is that your experience?
So there's always a lot of different fronts to answer this, and I'll try to make this as short as I can. I have a reputation maybe of not making these answers short, but I'll attempt here. I mean, I guess it depends on what you're looking at. If you're looking at owner occupied, you want to go out and buy a home, definitely there's headwinds there. Just regarding interest rates. The same monthly payment, I mean, as of a couple of months ago, the last stat I read, and I quickly did the math to make sure that I was verifying my numbers, the same monthly payment that maybe about a year or so ago that you can afford a $400,000 home here in the U.S., you could only afford a $280,000 home with the same monthly payment. Just to show you what the effect of interest rates have done. And then also with respect to commercial real estate or any investment properties, I mean there still seems to be appreciation on the rent side. Rents are continuing to go up. But there's a lot of commercial real estate out there that needs to either be repurposed or the financials don't make quite as much sense now as they did a couple of years ago. And the one thing I keep talking about in my groups and my social media followings is that something almost, I mean, it's not just a matter of a property owner, someone who owns a 40 unit or 20 unit apartment complex having to just selling it for less because it's worth less now. The debt they have on the property is a problem. And they can't, in some cases, I'm saying they can't sell it for a price high enough to cover their debt. So that's going to happen with a few different things, whether it's debt resetting after, typically with commercial loans, there's a 5-year period where, the loan is amortized for, 20, 25 years, maybe longer. But the loan either there's a balloon payment after 5 years or it reverts to an adjustable rate mortgage, which I know there's a couple of, I'm looking at a couple of opportunities now where they're in the middle of that adjustable rate period. So what does that, so basically there's a lot of debt that's a lot of structured debt that something needs to happen with that in order for the commercial real estate part of it to break loose a little bit and for there to be opportunities and for owners to be able to sell. And that's one of the things we do well in terms of being able to come up with creative solutions to actually maximize the amount that owners are able to sell their property for. So there's a lot of different frameworks that we could work with a property seller who might be having an issue because of the debt they carry or whatever else. But Interest rates, I mean, we still continue, we still expect them to continue to rise through the end of this year and through next year. The big effect, the big trigger is going to be what happens to the economy in general. If the economy slows down, that's going to hurt. That's going to hurt, actually slow down wage inflation, maybe even send that in a negative direction. And as the economy slows down, then interest rates will tail off just as a function of lack of economic activity. So there's a lot of things to look out for over the next, 6, 12 months and through the rest of next year. So a lot of people don't know how to resolve, how to sum that all up. So I know, in terms of, where the money's being, in terms of investors who are investing in properties not to live in, I'm hearing more people slowing down and just being careful and waiting for the next X period of months to pass before they make any stronger bold moves, unless something comes up that makes complete and total sense. But there's a lot of risk in the market now, a lot of moving pieces with the interest rate, a lot of moving pieces with the economy. So I think that fear is actually making people, for the most part, slow down their investment activities. But yeah, what interest rates do to the economy and the effect of the economy next year, that's going to certainly affect what homeowners, people who are retail buyers who are purchasing a home to live in, that's definitely gonna affect that activity. So I know there's a lot there. There isn't an easy way of answering it, just because there's so many different parts of the market. You have the residential, you have the commercial, you have the investment aspect. Even from the investment aspect, what do investors want as far as a return? Are there products like Lynn's fund that, based on a return and risk profile, someone looking something along those lines? Are people still interested in acquiring certain types of real estate that can cash flow through this period of uncertainty? It really depends on what part of the market we're talking about. And it's, even though
Thank
I
you.
just tried
Thank
to,
you.
it's pretty hard to summarize all of that in just 2 minutes. But I hope some of that was helpful, and I know we'll have the opportunity
You're,
to re-listen to this at some later point in time. If you have any questions,
you're,
be more
Paolo,
than happy to answer anything I can directly for you offline
you're,
after this.
you're my favorite property investor.
Well, let me tell you guys, and I've got I saved the link to try to do this later today or tomorrow. But just today I was reading an article talking about here in the U.S. And it was a local article that had some data from Pittsburgh in particular, and also some data from the U.S. nationally. But long story short, it was an article talking about how many small business owners are falling behind on the rent. And it was very good. It talked about data as recent as this past October compared to historical national averages to last October, whatever. I won't try to give any numbers from memory. I will post the article on LinkedIn and add some comments. But bottom line is the data is looking really, really, really terrible. The small business owners missing their rents are at historical highs. So people are struggling, and everything is a little bit of a supply chain, right? The individual customers, they're getting hit with higher gasoline, maybe higher interest rates on the mortgage, all kinds of different things. And so then they're not going to the stores in turn, and then the store owner in turn is in trouble with the landlord that may be the owner of the mall. Um, Paul, let me ask you a question. Because I know this gets done in residential, and I think this got done a lot back in like 2007, 8, 9, 10, when the wheels were falling off the truck. But a lot of times in residential, they do these things called short sales, where basically you sell the property for less than the mortgage, and the bank agrees to maybe eat the difference just to kind of get somebody in there that can make the payments going forward. How much of that is done in commercial?
Short sales and commercial. I don't hear a lot about that that specifically in commercial. I mean, there's to some extent, but it's different just because there's so many different terms. Um, but even still, and I'm not an account, so I'm not an accountant by any means, but and this applies to both residential and commercial, which is, you know, when a property, when a property owner, whether they live in the home or it's an investment property, whenever they are behind on payments, let's say, and 3 months pass, it goes, pre-foreclosure, then it becomes a serious issue after however many months, 6 months, whatever it is. A lot of banks are hesitant, especially as a result of '07, '08, '09, and a lot of the regulations put in place regarding like liquidity and solvency of lending institutions. The banks are hesitant to take those properties back or to even acknowledge that there may be a problem because they can't take back those properties because they may cross over a bad threat or a bad debt threshold, which would hinder their ability to then loan money and then stop the flow of money back and forth, which is what killed everything in '08 and '09. That lack of money transacting just back and forth, whether it was short term, long term. So, I mean, short sales, I don't know if that's really the term to call it. I don't know what I would call it, but there would have to be some sort. It depends on the asset. If it's valuable, and a bank thinks we can just forget it, we're not going to take a short sale. We know we could. There's enough equity in here. It's just a matter of the property owner not making payments, but we know there's a lot of equity here. It may be worth their while to take it back just because it's a larger asset than maybe a $50,000 house or a $100,000 house or a $200,000 house. But if you have $1 million asset and it's just a matter of the property owner not being able to pay the rent, maybe they'll gladly take that over and sell it and recoup it if there's enough of a margin there. Um, how many short sales or those type of renegotiations happen in commercial real estate versus residential? I don't know what that number is, but I just wanted to point out a couple other factors that either are would be that would help facilitate commercial property owners either do the same thing, do a short sale type transaction where they're negotiating with the bank for a lower payment or something, versus some other characteristics of the investment where the bank just might want to take it back. And that's actually two really good questions that I'll probably run past a couple of the bankers who attend my monthly commercial group meeting next month. So I'll definitely ask them that, but you have a better follow up.
May I chip in?
Absolutely.
Many of those loans were packaged and sold to investment funds. So the banks actually have very little risk in the foreclosure because they've already disposed of the assets that were on the balance sheet. So consequently, and Wells Fargo, and I have a different name for them, but Wells Fargo
I do
is
too.
is a classic example. I mean, they package those loans, get rid of them as fast as possible. Residentially, the federal government actually will reimburse. We don't a lot of this is not known, but reimburse the holders of those mortgages if they go bad. They'll reimburse them a very significant amount of the money. I've heard numbers upwards of 90 to 95%. And so even the funds, the trusts that are holding those loans, don't have a whole lot of risk because we, the taxpayers, other than some people who decide that they want to live in Ireland, those taxpayers don't pay for these things. Okay, but the point is, and I believe it's somewhat true in the commercial market. I've been out of the commercial market for a long time, but it's the problems, I see it. I wanted to get back in the real estate business after I lost everything in 2009, okay, in another business. And I sat there because my experience was in the in apartments principally, and cap rates of 4 to 4.5 to 5% just don't cut it. Because if interest rates go up, it's like a bond. The value of the property comes down, okay? And of course, in a bad market, people have trouble paying rent, and you can't make it up. In that particular case, can't make it up in volume. So the banks are in pretty good, I think. It's not like it was with Lehman Brothers and Bear Stearns and some of those people in 2008. I think the banks have pretty well insulated themselves in this particular instance. So just my take on it.
In Ireland, as you mentioned it, we have these companies who, back in 2009 and 10, when things weren't good, they would have a portfolio of properties, and you could bid on 20 of them or 200 of them or whatever, and so they realized that whatever potential was in that asset, so that they could clean up their loan book, and they could keep going. So but that you'd have vulture funds buying these properties, or groups of individuals, which there's nothing illegal about it, but it's not very nice for some people.
Yeah. Well, and the thing that makes real estate interesting to me, and they always say how local it is, right? But I'll give you guys an example that I was talking with a lady the other day, and I'll make it very specific and very personal. The condo where my mother lives in Miami, okay, which frankly is nothing special. A couple years ago, the rent of an apartment like hers might have been $1,700. I mean, she owns it, so this is no issue. But if somebody wanted to live in that building, it would have been about $1,700 a month, which I thought was a lot. Okay. Today, somebody told me, and frankly, I didn't believe it. I had to go double check it online. Somebody wants to live in that building, it's $2,700 a month. The reason it skyrocketed is because the situation in Cuba is getting so bad that people are leaving Cuba like crazy. They want to go live in this place called Hialeah, north of Miami, which is where all the Cubans live. For some reason, they all want to go there. And so now there's this influx of people. Construction cannot respond that fast. And so long story short, in a span of, I'm going to say 3 years, the rent went from 1,700 to 2,700. So you guys do the math on that, percentage increase. But I'm going to tell you, it's and I just say, oh my God, I'm working down there, and maybe I got a middle of the road job, maybe making $15 an hour, and now I got to pay 2,700 a month in rent. How do I live? But it is what it
Doesn't
is.
this all point to the principle that anybody, whether they be professional or otherwise, should not rely on one single stream of income? They should have a diverse portfolio of streams of income. The average millionaire apparently has 7 streams of income. So they're going up or going down, or they're staying the same. But that's one of the reasons I got tied up with Lynn, and I'm so delighted I did. And look, it's giving me a sense of control over the future. Now, it might go wrong, but look.
Yeah, you never know. I mean, things happen, but hey. Well, we're still kind of sort of in the second round of questions based on the introductions. So, um, any more questions or comments based on the introductions? No? Rhoda, I'll just make a comment for you, and maybe you know this, but I know at least specifically FedEx, they subcontract out a lot of their routes to subcontractors. And I bet you those guys are probably struggling to find drivers. So that may be a particular area where you try to focus on is these FedEx subcontractors, um, because again they're all running individual routes of I'm thinking anywhere from 1 to 10 trucks, give or take. Okay. Well, Patrick made a comment. I'm going to switch over to just talking about business in general. And Patrick made a comment that basically implied that we're going into a recession for sure next year. So, Lynn, I'd like to get your opinion out there in Philadelphia, and Paolo and Rhoda, you're up in Indiana. Do you guys agree that we're going into a recession headlong? Do you think there's still hope for maybe a soft landing? What do you guys think?
My take is we're headed there. I think interest rates are going to go. I would predict, and remember, you were talking about 2007 to 2010, but I went through the 80s. I went through interest rates over 20%. I went through the end of the 80s when all the savings and loans crashed. Okay, and when there was very, very significant dislocation in the economy. And I see it happening again. Things are cyclical. They repeat themselves. And I honestly believe we are headed for a recession. And I think it's going to be worldwide. I mean, Credit Suisse, the largest bank in Switzerland, is teetering on filing bankruptcy. Okay. One of the major banks in Australia, teetering. Okay. Deutsche Bank, teetering. There are rumors that the Bank of England had to prop up the pound to keep England from going bankrupt.
That's true.
So
That's what happened. Yeah.
yeah. So anyway, so I think this is a worldwide problem. We in the States, maybe we're lucky, maybe we're not. We happen to be trailers rather than ahead of it. But I think it's going to hit us. I think it's going to hit us.
Yeah. Well, I know in China, and just because I read about it, not only do they have a lot of trouble with their zero COVID policy, and in terms that it's a lot of stop and go for manufacturing and just for the economy, whatever. But they also have a big issue with let's just call it a property bubble over there, where they do something that here in the U.S., at least it's not, let me say it this way, not as extreme, is basically if you want an apartment in a condo, you pay for it first, either through just paying for it because you have the money, or you get the mortgage and you start making mortgage payments, and the construction hasn't even started. And then they do the construction. And as they're constructing, you keep making your mortgage payments and whatever. So it's very leveraged that way. And then, of course, and I guess in theory, from what I read, is if the construction gets delayed or doesn't happen or doesn't finish, whatever, you're still sort of on the hook with this mortgage that you're paying. So China is going to have some problems over there, and of course, they're the second largest economy in the world, or maybe even the first, depending on how you want to count it. So whatever happens over there is a big problem for us over here.
Yeah, and I'm not sure how good they are at predicting housing demand and a number of new units they need. I know here in the US, it sounds like we're much better at that now than we were maybe 12, 14 years ago. But I've heard of a couple very significant housing projects in apartment complexes in China that they just shuttered for whatever reason, whether they just whether it was lack of funding on the bank, on the investor or banking side, or lack of demand, whatever the case is. The end result is they have a couple of 1,200 unit apartment buildings that they were basically built out the shell and then just stopped. So I don't have a feel what's going on over there. The one comment, Sal, I will have for you regarding your mother's the comment about your mother's rent inflation with the 17 to 2,700 rent, and I don't know how long of a period of time, is that, from a housing perspective, I mean that's where lack of affordable housing units due to tightness in the rental market, which is due to a supply and demand issue. I mean, the more Class A apartment buildings are built here in Pittsburgh, for example, you know, like even in nicer neighborhoods, like higher end neighborhoods like Shadyside and other higher where more wealth is centralized in different pockets of Pittsburgh. And every time there's a Class A building built, it puts a little pressure on the Class B and Class C's in other areas. So I'm not wishing that to happen for those other. I mean, even Shadyside. I mean, or even Southside, and Southside is unique in its own way. But when I hear there's another 400 unit building going to be built in Robinson Township near the airport, and everyone's on Facebook or LinkedIn complaining about the price, I think to myself, it's I'm not renting those units, but it's going to make other units more affordable for the people that are complaining about the high prices of the new stuff. So I just wanted to add that comment to something you had said earlier. I think that's
Paolo,
pretty.
let
I
me
think
let
that's
me
pretty
ask you this
significant.
question. Let me ask you this question because I don't want to be guilty of thinking that technology is going to solve everything. Okay.
Mhm.
But the other day I was watching on TV that I think it was one of the really big home builders. It might have been Lennar. I don't think it was Toll Brothers. Long story short, they were partnering with this company that does 3D printing, but now they're doing it with cement for like buildings. I think it's called Icon or something. So long story short,
Yeah.
they were out somewhere building, entire neighborhoods, multiple houses. Of course, the part that was a little disappointing is this is supposed to be a way to make them more cost effective, more affordable, and yet these houses were like $300,000, $400,000, which in my book, I don't know the neighborhood, but it's I wouldn't call that affordable. Um, but of course, I also get it, right? This is like the military buying the first prototype, and then we keep mass producing, and we keep driving down the efficiency and then the productivity, and we finally get the price down. Long story
Yeah.
short, how much hope would you have that 3D printing is going to help us, even if it's 10 years from now, get to really affordable housing? And really affordable, gosh, I don't even know, but I'm going to say somewhere between 75,000 to 150,000. Is that even achievable?
So I'll even speak beyond, and I will keep this brief, I promise. I'll even speak beyond just 3D printing, but just just material costs, are what they are right now, continue to increase on some level. So it doesn't make sense. New construction doesn't make sense in a lot of different communities, unless it's going to be valued on the retail market for, 200 plus, $200 a square, at least here in Pittsburgh, $200 a square foot. If it's not going to be assessed at that much in those areas, it doesn't make sense to do it there. Well, 3D printing, but then you have pockets of areas where I don't know what they're called, tiny houses or small houses, or that whole concept, that whole movement. That especially if you're looking at urban areas, for example, where you had a dilapidated building that you had to tear down, but now because the current zoning laws don't allow you to build quite the structure that was there because of setbacks and other rules about, adjacency and neighboring lots and everything else. So maybe those areas are able, maybe those type of lots are able to be brought back. But generally speaking, the effort towards looking at how to minimize construction costs, two things. One, construction costs in general, but then two, incorporating different products and services that that consumers want. So whether it's higher energy efficiency, how do you do that? I'm talking to someone, and I'm going to share this video because I'm talking about Rachel. But she has a pretty impressive company where she's working on modular housing, and maybe I shouldn't have said her name out loud. I don't know if that's okay. But anyway, she's working on modular housing, which provides a lower than average modular construction price, but at the same time incorporating efficiency. So, for example, if you buy a house and slap on, this is my crude analogy. If you buy a house and then you want to add $30,000 of solar panels, maybe there's certain aspects of that they can incorporate into the modular part of the construction to set up the infrastructure so they don't have to rewire everything else, then later just add panels. That's just, in my mind, one possible use. So a lot of different ways of and that are being evaluated and pushed and sought after for lower construction costs, but then also the energy efficiencies of being able to incorporate certain things into modular housing or some other types of manufacturing, whether it's 3D or even tiny houses and 1,200 square foot city lots that have grass growing because based on current zoning, you can't build what you built 100 years ago because, again, setbacks and everything else. So there's a few different things. I'm hopeful that innovation will. I mean, almost any time there's an issue, innovation, technology, a different way of thinking always comes through and helps us break down those walls. So I'm hopeful. I don't think it's going to happen in the short term because I think we're all going to be just making sure we know what side is up over the next year and a half here. But I still think those innovations are going to make a difference in the short and long term.
Yeah. Break down. I was laughing. Break down those walls. No pun intended, huh?
Yeah.
Anyway, well, listen, guys. Let's do something. It's 2:52. Rhoda, you've been very quiet. I will give you the last word. Whether you want to make a comment or a question, or you get the last word in this meeting.
I'm starting to be sorry that I tuned in because everything is such a bleak picture ahead. Um, you have to be cheerful about tomorrow, otherwise it's
Here, here.
it's
Well,
awful.
all right. So tell us something good. What is on your radar that is good for the? Actually, let's not even talk about next year. Let's just even between now and the end of the year, between now and December 31st. What is on your radar that is good, either personally or generally?
On a personal level, I'm planning a trip to Israel to visit my family in January. So that's
Great.
going to put things in perspective. The way that they've handled the pandemic, the way that they handle building is very interesting. And the story that you told, one of you told about when my mom years ago moved to Israel for the first time, she had paid on a mortgage. She had paid for an apartment, okay, before it was ever built. So when the apartment was supposed to be built on sort of on stilts so that the bottom would be the garage for the cars that weren't supposed to be apartments. So my mother, who could not speak Hebrew really well, she went to court. She gets to Israel and the thing is not the way it was in the contract. So my mother has the guts to go to court and win back the money for all the tenants
Oh, for
for
all
that
the tenants.
for that violation of the contract. So anyway, that was kind of an interesting memory.
Okay, excellent.
Amazing, amazing woman, an amazing woman. Fair play. Well done.
Oh, and listen, and let me tell you, because I do a lot of business travel. When you don't speak the language, it's hard to communicate with people. I mean,
Yeah,
even if you're paying for a translator, I don't care what you do, it's still hard to
yeah.
communicate and get meetings done and get something accomplished. Um, okay, guys. Well, listen. Let's do something. It's 2:54. We've had a great meeting. I thank Paolo for all his insights. I'll send you that quick email with the link to the article that I was talking about. And do me a favor, please let everybody know about this meeting. We'll have it again in 2 weeks. It's always more fun when more people join. And that's it. Thank you, Rhoda, for helping us end on a positive note. And we'll keep our fingers crossed for the rest of this year and for next year. And I'll see everybody in 2 weeks.
Thank you so much. Thank
Thanks,
you.
everyone. Have a great
Thank
day.
you. Bye bye.
Thanks. I remember you, Sal.